Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today's the 31st of December, and we're going to take a retrospective look on this year that was 2022. A year ago, if we go back to January 1st of this year, was a day of optimism and a fresh start of a new year. The world was in its umpteenth wave of COVID. Omicron was the new buzzword added to the vocabulary, and the word endemic was being used, and many countries were now starting to loosen their travel restrictions. I personally have not fully returned to the pre-pandemic average of traveling twice a month, but I did travel 10 times this year. It was well below my average, but it's a start to feeling like life is more normal again. The travel industry has struggled to cope with the return to normal demand. Business travel is still down, and the airlines that only months earlier had furloughed thousands went on a hiring spree and struggled throughout the year to attract enough staff to cope with the resurgence of travel. Even hotels lacked the cleaning staff and stopped the daily changing of linens. 2022 was a year of adapting to change. Little did we know that we would witness a war that would rival the atrocities of World War II. Little did we know that the vastly outgunned Ukrainians would fight back and hold their ground. Little did we know that a new Cold War would be upon us and would result in a changing world order. And little did we know that the conditions for a potential Third World War could in fact be brewing. Little did we know that the red-hot housing market would turn in a matter of weeks. And little did we know that inflation that was readily apparent at the beginning of the year would catch the ire of central bankers who would kick the economy in the teeth, because when the only tool you have is a hammer, everything looks like a nail. Those who were paying attention and observed the overheated nature of the real estate market used the opportunity to cash out and take some risk off the table. Others used the low interest rate window to refinance while they still had the chance. Most people I speak with directly had a solid year in 2022, even if it was unexpected, and even if their original plans had to change. Most people I know lost a few weeks to COVID. Many traveled again for the first time in 2 years. And we are now finally seeing China emerge from zero COVID. The question is, will it result in a major increase in economic activity once they get through this wave of major infection? Will China lead the world out of economic doldrums? We're probably going to experience more waves of coronavirus infection. 2022 was a year of economic uncertainty and destruction of wealth. Much of that wealth was in the stock market, some was in crypto. Bitcoin is down 65% this year. Private equity firms and stock pickers took a major hit this year, whether it was at SoftBank or Cathie Wood's ARK Invest Fund that saw a drop of 60% so far this year. We saw trillions of dollars in wealth evaporate this year. We saw the stock values of bellwether stocks like Amazon lose 50% of its stock value. Facebook parent Meta lost 64% of its value. Netflix is down by a half. Tesla is down by 69%, and Google is down by 40%. As damaging as this year was, we have not seen any major financial day of reckoning events like we did back in 2008. 2022 was also a year of revelations. We started to learn the truth at Theranos, the truth about vaccine efficacy and vaccine testing. We learned about cover-ups at the NIH and at the FDA. 2022 was a year of extreme volatility. We started the year with supply chain disruptions in everything from lumber to semiconductors to copper to windows. We saw lumber prices peak in May of this year at $1,450 per thousand board foot, and today that price is down 74% from the peak. We saw window lead times extend from 7 weeks to 16 weeks across the board, and we've still not fully recovered, although we're starting to see some signs of reduced demand and shortening lead times. We saw a shortage of chips translate into a shortage of about 11 million vehicles in 2021, and that carried over into 2022, which pushed prices up for used vehicles. The inventory-to-sales ratio is still near historic lows that we saw at the start of the year. Used car inventories have doubled from what they were at the beginning of the year, but they're still far below historic norms. Businesses bulked up on their inventory in response to the shortages. The result is that the inventories are bloated across the board. We've heard inventory warnings from Target to Walmart, Lowe's, Amazon, and many others. And now in the fourth quarter, shipping volumes are down 7.6% month over month and down 25% in volume from China. Shipping container prices have fallen nearly 90% since the peak, and they're now at pre-pandemic levels. We've seen energy prices spike on a global basis, with prices in Europe up by nearly a factor of 10 for electricity. Prices peaked at $120 a barrel for oil, and we're down now at a more reasonable level of $80 a barrel, but inventories are at generational lows. The United States is in a very vulnerable energy position, having largely depleted its strategic petroleum reserve. We've experienced major yield curve inversion for the second half of this year, signaling that the market believes an economic contraction is in our future. In our business, we had a strong year overall, and we also had some mixed results. We completed the acquisition of Norris Ranch, and we were awarded the Senior Housing News Architectural Design Award for our assisted living and memory care project in Lake Charles, Louisiana. We divested of a few assets in Philadelphia at strong prices. We had to put a number of new construction projects on hold due to higher interest rates. We completed the engineering and entitlement of a number of projects, including a residential subdivision in Caldwell. We completed the acquisition of several storage projects, and we completed the merger of our company with Infinite Real Estate, adding some serious talent to the team in the process. We suffered a setback on another project when City Council denied our project altogether, and we had to reconceive the project at lower density. This year has been a year of adaptation and of resourcefulness. In 2023 promises to bring even more economic uncertainty and, frankly, more opportunity. As you think about that, have a happy new year. And may 2023 bring you more opportunity than challenges. Have a wonderful New Year celebration, and we'll talk to you again tomorrow.